Hey traders, it is great to be back here with you today. My name is Mike Fairborn and welcome back to our ThinkScript class. Happy Thursday, or should we say Friday Eve. It is good to be with you all. Folks, today, hey, I want to take a look at building up a basic sort of code that has been brought up a few times before. What does the progression look like? I'm going to show you how I've started off with a basic sort of a code to help me just find when a stock is going higher from one day to the next. And then I progress from there. I'm going to show you the code as we go through that. In addition, today, what we're going to want to do is we're going to look at a number of different stocks and stock examples, particular setups from previous ThinkScripts that we've done, some of the more in-depth ThinkScripts that we've done that are actually showing some interesting setups for a number of different stocks out there. The TTM squeeze, some of the flags reloaded. We're going to go through those again. It's an interesting time to be looking for price patterns in the market, according to some of those ThinkScripts that we've gone through. But we'd like to take just a moment to welcome everybody here that is in the chat here with us. I'm joining the chat by my good friend and manager, Mr. Scott Thompson. You'll see him in the chat as ST. You can follow Scott and I on X, Scott Thompson CS. You got to make sure you put the CS in there, Mike Fairborn CS as well. And that's without an E, by the way. There's a lot of different imposters out there with, a couple of different O's, a couple N's, whatever the case might be. You just want to be mindful. You want to spell that correctly if you want to get on our X channel, but we'd love to have you there. We do post on there, a lot of different stock examples as well as financial content too. But having said all that, would like to welcome Life of the Fast Lane. We've got BJ. How's it going? Rocky Raccoon. Great to have you on board. We've got Chris B, Danny, Will, Mighty Mouse, Riceberg. Hello to you, as well as we've already welcomed BJ, but hey, BJ, welcome again. All right, well, with that, let's get into some disclosures so we can get the show on the road here. All right, information here is for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. The Paper Money software application is provided for educational purposes only. Backtesting results, which we will look at here in this class from time to time, are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results, although we all are always looking back just to see how things unfold in the past because they may have similar results in the future. But wanted to make that point clear right there. Now, investing involves risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results or success. Now, there is a look here at futures and futures options trading listed down below. We do not trade futures in this class, but I did want to post this here and requested this because sometimes we will tap in to some of those future related products just to see how the charts are doing. Like, for example, with futures, we do get to see some certain indications like volume, for example. Okay, well, let's dive into it. Let's just take a look, pull this up first initially, looking at the S&P 500, folks. And it is interesting to see, and wanted to note here, where we are at, where we stand right now. Well, as you might have guessed, we are at all-time highs. Today is an all-time high. Yeah, so when we're above this range, we've been talking about this for a while on a number of our scripts and things that we do look at here. That is around that, above that 6,100. We gravitated quite a bit around that big round number at 6,000. But did manage to get up above it, and you can see right there, just touching that high. But it confirmed this right now, but just clicking right here, there is our high. Just want to see where we're at right now, because it is an all-time high range, 6147, 6144. I'm sorry, it is not quite there. I was looking at the NASDAQ. I had thought, just looking at it, we were there, but it appears that we are just a couple of ticks away, like three. I think we were approximately, what, 3-4 points away from that. So not quite. I was thinking we would get there. Oh, we might. We have an hour left of the day. I wanted to say, though, that we are there in the NASDAQ, and I wanted to pull up this last as we look at it, because a lot of the ThinkScripts that we could be looking at could be tied into the NASDAQ 100. A lot of the stocks I wanted to look at today do take the NASDAQ 100 into account. A lot of times when you're getting a stronger economy out there, more growth, the possibility for cuts in interest rates, sometimes, and a lot of times this is the case, not every time, but frequently enough, a lot of technicians, fundamentalists will say, keep your eye on those tech stocks because they tend to grow faster. So does that give us some hints, even in terms of ThinkScript? Possibly. Look over here with me. That's why I wanted to review some of the stocks on some of the ThinkScripts that we built previously. But if you take a look over here with me, look at this. There's a nice little flag pattern right there, perhaps, and we may be breaking out of it. And I do talk about flag patterns in my Tuesday class quite a bit, so my eyes are really geared toward it. I'm kind of a pattern guy. I do like to look at a lot of price patterns as well, but we seem to be breaking out of that range right now. And what does that mean for an upside move? By the way, I just mentioned I'm a pattern guy. Well, let me just draw another pattern that I put in here previously. It's not exactly an inverted head and shoulders pattern, but we might be unfolding to a higher level based on these projections over here, and that can change. It could have some impact on what kind of codes we're looking to create for our class or just currently, what we might be looking at in the market. Gaps can be interesting. You had a gap right here. One of the basic codes I wanted to show you today is how I progressed and how I learned really to get into a gap type code. And I'm going through this to help you start and then show you how I sort of progressed as well. Before I do that, I do want to see where the projection of this flag is going to be because I am very, very curious about it. Now, down here at the bottom, I'm going to use this drawing tool. I'm just great using this trend line as a drawing tool here. But if we were looking, it depends. I mean, there could be a couple of different flags. If we're looking at a shorter term flag, let's say right here, if I just duplicate that, that was a right click and duplicate. Our price target's not as high as this other move, but there might be, smaller patterns operating within larger patterns as well. Point is we're bullish, and today we're going to be looking at upward gaps. All right. Welcome to you. Do not copy, as well as Joe and Sharon. Great to have you on board, folks. So starting off with the basics here, let's take a look at, I'll show you a couple of different things. So it will pull up gaps wherever we're at. I wanted to start off initially right over here with a basic gap progression. So let's talk about this. I'm going to just pull up the code so we can go through it in detail. Now, can you guys see this okay? I hope so. I might just highlight it. I don't know if that helps or not. I realize that it's kind of a lighter, it's not really like pure white on that black backdrop when you're looking at the code here. But let's start off initially. I've got 3 different progressions here, and actually 4 if you want to talk about the scanning at the end. But before I even did that, how do we build code in a chart specifically? So we're in charts. We can come right down here. I did that kind of quick, but in our little dropper icon over here, up top here, I clicked on this left-hand side, create. Okay, many of you know that already, but that's where we can initially go to create code. We've had a few classes, and I could show you some of those in our archives where we talked about some of the condition wizard gems that are out there. This is a great way to learn and to see how ThinkScript does work with specific code. Down here, there is an add condition that you can click on, just as a quick note, and you can create them this way as well. Today, we're going to just be talking about writing code. Now, that's done in the ThinkScript editor right there. Okay, that's where our editor would be. It starts off with some data, plot data, close. I'm just going to delete that right now, and then we can start. Now, I've already built the code out so we could talk about it, save a little bit of time. It's in red here because I don't have anything set and ready to go yet. But let's go through this and break down specifically the progression. Okay, there are actually 3 different codes. Don't worry about the scanning at the bottom. That's always a question I get as to when we have our data, when we have our code, what's next after that? Well, in many cases, you want to scan for what you're seeing on the chart so you can cover a broader base of stocks. The S&P 500, for example, we'll reserve that down below. Now you can see I've just put this this hashtag sign in there or number sign, and what that does is it doesn't make the code available to ThinkScript. It's just like wording that you can look at, right? You're just looking at the words. But this is how I got started initially thinking about a gap. This is the progression. So I said, a sign, I'm going to take this off for now, so it's actual code, so it can be read. And there you go. And notice when I did that, it said OK down below. It's ready to go. The code is acceptable. It's really quite straightforward. There is an assign price color. In fact, if you start typing assign in here, you'll get a bunch of different notifications. In fact, there's a background color, there's a gradient color, there's a price color. This, when we select that advanced assign price color, we're looking at the price of the actual candle or bar itself. Now, then to define it, we have to put it in parentheses, okay? It's pretty straightforward, but if the close of the bar is greater than the open, then color it blue, otherwise red. Okay, I've already got red, as you can see, as a down candle, but if it's greater than, I'm going to assign those as a blue color. It's so basic, but I wanted you to see that code. So let's just click OK down below, and you can see it. What did they do? Exactly what we thought. Ooh, that's tough to see, isn't it? In that darker background, but there it is. Did we close higher on that day? Yes. We didn't necessarily have to open higher. In fact, some of these opened lower, but they closed higher than they opened. Okay. They're just higher than the close. In other words, they were up days. Does that make sense? By the end of the day, they were up. So basic. It's not a gap, but you can see that there are gaps within there. That's maybe a little bit easier to see, certainly on my eyes, the blue. But there you go. There's the gap right there. Now, ultimately, I said, well, gaps are really quite strong. We've been seeing a number of actually gaps in the market as of late. There have been a few gaps that we've been seeing in terms of prices going up and showing strength. In fact, the market right here, the NDX, gapped up right here as well. That is such a basic code, but it is a great way to start the learning process as to what's going on. Okay, so that's the assign the color. We're just using the color only with a basic reference here in terms of open and close. And the color right here, you got to put color and then dot. You know, the color is funny. The color is almost like makeup. Now, I don't use a lot of makeup, but some people use a lot of makeup. And there you go. This is a way to just color it whatever you want. There are a whole host of colors that can be used. You can start typing in those colors, and guess what? You think it's going to reference it for us? There's yellow. Oh, color. Yes, yellow. There it is right there. It's hard to see with the color I've got, the color scheme I've got, but there is yellow. So, and there is also, like, for example, dark. Oh, not dark cloud cover. That is a candlestick pattern, but there is a dark green right there. Oh, it's all one word, dark green. So there are different colors in there. Let's just stick with blue for now, but that's fine. That's the starting point. I'm going to go back and just put a number there. Over that, I'm going to open up the second part as in this progression. Okay, again, you guys, this is designed to help you try to find what you might be looking for on a chart under maybe bullish type conditions. Number 2 here, where we go. Let's go into it. I'm going to take these off right now. We'll explain it. There we go. Really lights up when you take that number sign off, and let's go through it. So what we're going to be doing now, we're going to be talking about the defining or the definition here. We want to have a reference point. Now, I've always kind of looked at this. This is a gap. I've just defined it simply as what it is. I'm going to state it whatever I want. It's gap up. I call it what I want to call it. It is a gap up. And then I'm going to have what that gap up equals. Okay, this is a condition that we're setting out here and waiting for something else to happen. Okay, it's almost like you're preheating the oven. It's sitting out there. It's waiting, though. There's another condition or something that could be added to tap into it. All right, so let's start off again. This is going to equal parentheses open minus the close. Now, it's not just the close like we saw up here, because that's the close of today. On a gap up, we're looking at this occurring, right? We want to see where the candle was at yesterday and where it's at today. So when that close has the brackets around it of 1, okay, we're going back 1 bar from the present is what we're doing right there. We're going back 1 bar. That's what's happening there. Okay? And that needs to be there. Now, if I wanted to go back 2 bars, yeah, you pretty much have an idea what I would choose there. It would be a 2 ... whatever you wanted to put in over that time frame. We're just calculating simply here where we were at, where our close was the prior day to where we opened. That's all I'm interested in here right now. So the math behind that is you divide it by the close of yesterday, and does that meet the definition of what we're after? Greater than or equal to, so simple if you do it this way, just 0.01 in decimal format. We're going to still assign a color here. I'm going to keep things the exact same way. I'm going to say blue, but I'm also going to add something else in here too. I'm going to say else color, keep it current. I'm not worried about any other gap downs because what am I looking at in the market? Where do I want to see strength right now amongst a whole group of stocks? Well, maybe the NASDAQ 100. It's at all-time highs. It's gapped higher. Maybe it's part of a flag pattern unfolding. I'm just, this is why we're doing this. Okay, so if we're looking for a gap here, we're just looking for that alone. We just want that to be blue. Otherwise, keep the candles their exact same color as they were before. That's it. All right. So let's run it and we'll clear this off. There we go. Click OK. And there you have it. Now that's just going to give us the gap ups. It's just simply a gap up of 1% or more. Okay. Now, does that mean that it closed higher on the day? No, it's just a gap. So it is still a progression. It gapped up, but we don't know from the prior day. From the close to the open, you can see right through here. There's a good example. There's a gap. There's a gap. There are other gaps in here as well. We're not really concerned about where it closed at. We're concerned about the opening gap at this point. But ultimately, the gap, to really be a gap, you want the gap to actually close. Like, for example, here is a company that had an earnings gap recently. That's CCL. And you can see the earnings right there. Carnival Cruise Line. This group has been fairly strong, this sector. Some of the discretionaries, and that's a gap. We call it a gap because the gap actually, it did gap up, but it actually held that gap too. So that's going to be the third phase of our progression here of this basic gap, getting to it. Let's do that right now. So I'm going to go back into it. I'll put my number signs back in here just as references. We'll take these off. And I've got two in here. Actually, I did not even have that one established, but that's okay. Let's go ahead and set this up as it stands right now. So notice how what I've done here. I've defined something in addition. So it's really, really straightforward and logical once you get it down. We've already got this code down, and we're simply going to be using this again because we've defined what a gap is just by using standard coding language. It can be used really across any sort of computer type language. But that's our close, right? We got our 1%, but our gap up initially. But now we want to make sure that it closes up, just like that CCL, that Carnival trade. Did it close up or not? So what we're going to do is close up. We've got to define that. So the close, we've got our same definition here, but notice what we're doing. We're saying today's close minus the close of yesterday, it still holds by the end of the day up 1%. Plus. Remember, there's the greater than or equal sign. So very, very important there. What's gapping out there? We still have the same color, the same setup. You're going to see that a few of these candles that we had previously, like on this chart right here behind us. Oh, let's go ahead and just click OK. You click OK again. Many of these have disappeared because now these gaps are specifically defined. Now you can see there's actual gaps on the chart, and it may be a lot more useful at this point in time. Okay, so we've got that, and what I want to do next is hit the part that everybody wants to discuss, because how do we find these on the chart? How do we find them? Let's say if we want to scan through the S&P 500. Well, there you go right there. What we want to scan right now, what has gapped up and what has closed up, what's the difference that we're using there? That's the coding right there. It's just the plot scan equals gap up and close up. So we have both of these conditions that we've defined previously. Gap up, close up, pretty straightforward, folks. The only difference here, it's not going to do us any good by having a scan in the charts. It's not going to work. So what we're going to do, I've put this over here for us in the scan tab. Okay, oh, let's clear these out. I've saved it, so we should be able to just load it up under the basic gap progression right here, and that's the code. You notice what I've done on this? All I've simply done here is take off the price itself, right? The price discussions, we looked at price and assigning the price itself. Instead, we're just plotting the scan. We're not too worried about coloring anything right now. We just want to make sure that it does exactly this. But that is that's the simplest I could make this code. I could not make it any more simple than this. Gap up, close up, and we're just scanning it. We've defined it. Okay, but that is really nice because it will get us a gap. Let's just try it right now. So right now I'm in the scan tab up top, sub tab, Stock Hacker. Folks, you've got to be in the Stock Hacker. You have to be in order for this to work. Okay, so you've got to next decide what you want to scan in. There's the NASDAQ 100. We could scan in the 100. And once you've got that in place, I'm simply just going to click on scan right there. Okay, so we've got these companies. So Alphabet or Google is up right now. There's, what do we have? Basically 4 companies here. One's a Class C, one's a Class A share of Google there. Let's take a look at these right now and just confirm it's doing exactly what we want. So I'm going to go over here. And the semiconductor group, are we having that gap? Indeed we are. There's your gap right there. Okay, there is the gap up. I have the color on here as well, okay, but it's not the, so we can reference it quickly too on the chart, so that now we have both the drawing, sort of a drawing indication or an indicator, and at the same time, we've also got the scan tab that helps us to find it. Now, sometimes you'll look at these and say, Mike, is that a gap? Look at this, it's like right in this range. Well, it's a gap from the closing. Remember, we're looking at the closing price here. And where was the opening price? That's a gap right there. And that gap needs to be, like we'd said before, 1% or greater. Okay. Which could define a number of gaps. This is a very interesting gap to sort of a scan to run during earnings season too. You can run it right off the S&P 500. You can tap into another kind of great aspect right in the Thinkorswim platform, and that's under the Market Watch tab. You can go into calendar and track out some of the earnings. And earnings will begin to pick up next month, I think. Let's go. July? Oh, sorry, yeah. August. Oh, we don't have them out that far yet, but they will be. There you go. There's July. It took a second to load. I think that's still, yeah, it's getting into some of these months here. We've got the S&P 500, but look at all these earnings that are coming up. What a great little way to have a couple of different things to catch your attention, a couple of different indications to catch your attention on the chart and the scan tab. What were the others in there too that we looked at? Here is Google right there, Alphabet. There's your gap right there. Okay, kind of coming out of a little bit of a base. The trend has recently been up. We also had AppLovin, ISRG. Okay. You got a gap. It's hard to tell off this bottom, but we did gap up from that weird sort of day yesterday. Could that be a reversal pattern to go up higher? That remains to be seen. ISRG, only 4 of them out there, not too many. And there is a much bigger gap on ISRG. Feel free to change those colors to whatever you may prefer to see there, though. Okay. Oh, okay. So Chris says, is that 1% gap significant? Chris, I've read in a number of books in the past, they have used 1% as kind of like an interesting sort of a guide. It can vary. I do like percentages because it kind of equalizes a move. as opposed to a point higher. That's why I'm using a percent instead of like $1 or $2, because that's relative, right? I mean, imagine $1 gap up on something like ISRG. It's going to be a very, very small move, but if it's a percent, it makes it relevant to the stock itself. So I'm using those percentages, and I have seen that as a general guideline, but I've seen others as well. The nice thing about this is too, Chris, is you could change it if you wanted to as well, right? We could put it to a 2 or a 3 very, very quickly in that code. In fact, in the scan, all we need to do is just change that one spot to do that. You know where it would be? Right there. In fact, you could say it gaps up 1%, but closes up 3%. So what does that mean? It didn't come, it still closed, it gapped up, but sometimes we're seeing on some of these charts is they gap up 3% and they only close up 1%, but it was still a gap. There's also something referred to as a gap and go. So you're going along and there's a gap, but then it runs the rest of the day higher. So it's an upward day. That's kind of like a gap and go run. So there's a lot of variations you can do just with these two simple, straightforward lines. Really, really easy to do. We're probably going to get quite a bit more. And of course, you could organize this into any industry you wanted to look at. One industry I just wanted to state. I'm going to go over here and just show you guys one of the grid charts that I'll use in my markets and sectors class that I teach on Wednesdays, and that's just over here on the 6-month chart. One of these that's actually been doing pretty well as of late is industrials, as we're looking at the S&P 500 sectors. So this could be really helpful too in terms of where you want to scan specifically, right? I'm going to scan through the S&P 500. We'll see how many of these are industrials. But if you right click over here, pull that guy up, yeah, kind of a flag, and it's sort of getting going here too. Now maybe gaps in this area might be more relevant as well. So I'm going to go back just to my regular here. We'll pull this up. I'm going to pull that back up again. So the basic gap progression, we've got that in place. We have it there. But if I go to my scan, I'm going to run through the 500 now very, very quickly to look for gaps. S&P 500 very, very near to those all-time highs as well. So here we go. We'll scan this guy. Quite a few more. We got a lot more stocks to look at too, like 5 times as many, but there you go. You got 24 companies coming up here. Any these industrials here that we look at, you can see that there are going to be a few. That might be materials. Construction and engineering is going to fall squarely in those industrials. So too is industrial machinery. And I guess that's it in terms of potential gaps for today in terms of the 1% that we're looking at right now. But these could be really interesting. You can see also that there are quite a few other areas in here, but those are gaps. Oh, by the way, so copper, FCX, just looking at a commodity, mix things up a little bit. There you go. Look at copper. Now, is copper jumping above a range right now that it's been stuck at for a while? And did this simple 2-line code help us find it? Folks, it's right there. Not only that, but our charting helped us find it as well, right? Our chart here. Our chart with that indicator gave us a good sense of that. If you were scanning through a number of different stocks, say for example, you're going through the S&P 500 or whatever the case might be, and you have this linked up, well, your eyes might just be glued towards any blue gaps. Boom, there you go right there. McCormick is also gapping higher today. It appears that it's up over 5% right now today, 5.5%. But you see how quick just those 2 lines can help us. Okay, well, cool. Absolutely, Chris. Yeah, oh, appreciate it, Scott. Scott has been answering questions as well. Very active in the chat. I do appreciate that. Mr. Thompson? All right, and welcome to all of you that are just joining us as well for the first time. Great to have you on board. Within this class, folks, we just look at some of the basics a lot of times. Today it was a basic ThinkScript class. We've gone into deep, deep waters previously. We're going to dive into some of those right now because we do want to also spend some time each and every week maybe finding some stocks out there that are showing us perhaps some interesting scenarios or setups that traders might be often looking for based upon some of those ThinkScript codes that we've previously created. So I want to go through those. But right now, let me just pause for a second and just state, folks, if you're finding value from this presentation, if you like what you're getting, do me a favor, just smash that like button real quick. It'd be great to know if that's the case. And always appreciate your feedback, comments in the chat as well. While you're there too, just below the like button on the right-hand side, just smash that subscribe button too. Would love to have you on board if you're not already part of the Trader Talks channel here. Okay. Let's go in and take a look at some other stocks. I'm going to take, just for the sake of separating these out, let's go ahead and just take this show study off for now. But that is some of your basic code. And by the way, if you guys did want this, I'm going to go ahead and just share this with you, just so you get a feel for it. And that code, be happy to share both, actually. No issues at all. But here is the scan for sure. Let me just click on the right one so we can share that. Okay, so here is that scan query. These codes are not guaranteed for timeliness or accuracy, but as long as the data that's coming to the platform is accurate, well, then ThinkScript should read that math and that code correctly, and you should get these numbers. In fact, I haven't really found a scenario when the when the data is correct that the ThinkScript is not working. But there it is, and I'll put that in the description section when we're done as well. All right. Yes, Rocky, I can use a different color. Light blue, huh? Yeah, the light blue background. Now that's one I haven't used. I'm either black or white. That's what I use, and I've kind of gravitated towards the black background, but you could use either one to take a look at those. And if that's helpful in this class, and I'd be happy to try something like that going forward. I don't think we'll need it for what I'm going to show you right now, but I appreciate that suggestion. I'll test that out. I've never done the light blue. That'd be fascinating to kind of take a look at. All right, well, let's do this. Let's go through a few of these right now. That, first of all, we built a code previously called the flags reloaded. And as you guys recall, Ken Rose created a flags list from a while back. And you guys bring up Ken all the time, so I thought I'd just bring that up. I just put one in here that was the reloaded. I built one that says, hey, we're coming out of the flag. I think Ken's code did a great job of just showing you the flag. This particular code shows the possibility of a follow through. Now, what we're doing here today is we're building on that NDX all-time high move, breaking out higher. Remember, with the NDX, when you're breaking into all-time highs, we don't have volume above that level. There might not be a lot of resistance. There may or there may not be. Sometimes you can break right out because we haven't traded in those levels before, and it could be a strong move. So based on that, I wanted to also tap into prior ThinkScript code. Here you go. There's a flag pattern right there. Let's look at the flag and just kind of highlight what we could potentially look at for a price projection, a projection on that price. There's the move to the upside. If we take that initial move, I'm just going to duplicate it, make this nice and easy, and just set that right there. You can see that, if we do get a full move, something that we call in the swing trade class, that would be a T2 target. That's the full extension of the initial leg higher, the T1 being this high right here, which we haven't even met that either. But you can see that there could be still some room in these companies that have had some trends off the bottom. Now this I did with a scan, and I'll pull up that code here in just a second. In fact, I could just do it right now. Let's just do that and keep it over here on the left-hand side. That'd be easy enough. So let's go over here. And this is Ken's flags. This is the flag reloaded. So this is where I pulled some of these out on the 500. Again, I'm using the NASDAQ 100 to find these, and you'll see them come up pretty quickly. But depending upon what the market is showing us, we might get these interesting setups. And there is Qualcomm right there. Not all of these are necessarily as interesting, but there is a possible bounce. Maybe the flag is starting. Some traders do like to wait for, and I'll zoom in on it a little bit more. Let's go 6-month chart. Maybe a couple of days of confirmation, 2-3 days to see if we're really getting outside. Today's kind of a follow-through day. Question mark is, will something like this continue? Okay, now that I've kind of got the flag patterns down, let's hit some of these others that are there. Meta. Potential projection on something like this that the ThinkScript is finding for us could be from the low to the high. And we take this down, We just duplicate that exact same range so you can see where it's coming from. We put it at the bottom. We've already met our T1 target, T2. Oh, okay. Into new highs if in fact we met it. That is an I don't know if that's an all-time high. It very well might be, but you can see it is into 52-week new highs, or at least 6-month new highs right there. Okay. Last but not least, NXPI. Now, this is a little bit different on NXPI. NXPI coming down, coming up to a range right up top here. A little bit of resistance, as you can see. There is resistance previously, but as of off the bottom, higher highs, higher lows. The trend is certainly moving up. Question is will it continue, and will it be able to get past what we see over here as being kind of a longer term level of potential resistance? So a break above that level could be very, very insightful. As a matter of fact, what I'm going to do is I am just going to right click right here, and let's just say this. Let's tap into some additional tools very quickly. Right click, create an alert. Create alert, and I'm just going to say breakout, question mark. And I can have this text me or email me. And generally those text messages are like within 3 to 5 seconds. They're very, very quick. But now let me know if we're getting past that T1 flag target as well. So might as well use it. It's right at our fingertips, folks. If you haven't used that before, you can go into Setup, Application Settings, Notifications. Okay, and then from there, you can just go in and set up your email, your text message, whatever the case might be. The computer can make a sound as well. So there's a lot of great things you can get from that as well. Okay, so I want to do this though. While we're at it, that Qualcomm, let's go ahead and just for the heck of it, set up, we just want to put in an example trade here while we've got it. And I'm just going to quickly do this. I'm going to right click here. I'm going to do a buy custom order with an OCO bracket. I am going to set this guy up a little bit higher on our potential target level. Oh, let's see if I could just actually click in it. There we go. That's fine. We'll just erase that. We'll just go for now, because I do like to set these up because I've got the targets. I'll show you how I can just kind of keep the targets on the chart as well. I'm going to click enter there. I'm going to set this down a little bit further. We'll just go back and just go 55 or 50 for now. On that, I'm going to put these as a good till cancel order. And I'm going to go ahead and set confirm and send. On that trade, we'll go on the chart tab. There is the execution. I'm going to pull my target. We're going to go for a T2 target up top. Click OK and pull this guy back down. Now, there are a couple of different ways to do this. Sometimes traders will just say, hey, if this is going to go, I think it's going to go. I don't want to risk, too much. So they're going to try to get out here at this level. Now, again, just a quick note on stop orders. They do not guarantee an exit. They do compete with other existing market orders for a fill. Okay, once they become a market order, once they're triggered, become a market order, okay? So I just put it below the low of the prior day, because a lot of times people are just anticipating, traders, that it's just going to go up if it's going to go at this point. Okay, so that is just an example. I wanted to just throw one of those in here. But let's go into our next setup that we talked about, our next Think script that's showing some indications here, and that's going to be the TTM squeeze. So this shows us some of that long-term consolidation that we can get. And let's go ahead and put that indicator up. In fact, I'm going to kill just a couple of these below to make up some space, but we'll put on that TTM squeeze. We talked about this maybe a month and a half ago, maybe the last time we talked about it. I'm going to adjust that squeeze, and that's just simply finding here for us a very, very low level of potential, volatility. In other words, the Bollinger Bands are trading within the Keltner channels. And so a lot of times when they're in a range for a while, what tends to happen is, let's see, the TTM. I don't think I got the right one. No, that's just the squeeze. We're looking at the TTM squeeze bars. This is a code we created that we'll just remove this one, but it gives us the number of bars that the company has been in this extreme price compression. And a lot of traders will look at this because when they see that extreme price compression, they're anticipating maybe a breakout of that compression. So a few of these that came up, as you can, you want to highlight it up top here. This is the NASDAQ 100 specifically. You can go through and take a look at a few of these, but some I wanted to focus in on here. I'm just going to quickly go to those. I had shown you guys earlier that industrial chart that was doing so well. It was one of the stronger sectors out there, if not one of the strongest right now. And what you can see over here with that is we did break above the highs, and now we're starting to, we've been in this range, and we have the number of bars that will count it over here. We've been in it for a while, a few bars, but that can often indicate that there's compression in the flag, and we might be ready to move out of that range. That's what we discussed here, and this is an interesting one that could kind of highlight the possibility of maybe another flag pattern getting going. It's an industrial company. Consumer staples, MDLZ is one. This is one we actually have a example of trade in our ThinkScript class already, potentially breaking out right there. But you can see that, a longer term triangle. We'll see how this unfolds. These have been doing okay, but not tremendously great. ADSK. You see it right now? We've been compressing. After that compression, sometimes you can start to break out. And that compression can occur in a sideways flag pattern. So maybe a couple of different indications in terms of technical indications. I'm looking at a potential flag pattern, as well as what you're already seeing here in terms of possibly a breakout. Maybe that compression will start to unload the other direction, and it will start to unfold higher. So this is one that has been and kind of shows a price pattern as well. Now, some of these too, we've talked about this as well, and that is GFS. Notice that after at least 3 days in that squeeze, we're now starting to expand. Could this be interesting? What do you guys think? You guys have a lot of, we have a lot of good technicians in this class that will end up going to the ThinkScript class, but is the trend up a little bit? Higher highs, higher lows. Sometimes you can formulate a bottom over a pennant type or a triangle type pattern. We might be getting very, very close. And it just so happens that based upon the TTM squeeze, that volatility expansion might be just around the corner. Now, semiconductors have been strong, so I'm just going to narrow this down to a couple more of these. But look at Intel. Intel has had a couple of these areas where it had been a tight range. Let me just show you historically using some of that back testing that we talked about. Tight range, it moved. Intel's been one of the weaker ones though, no doubt about it. As soon as that started to expand a little bit, you broke higher. A little bit along this triple bottom before we broke out. And again, right? But can we really ultimately get off of this giant, I got to say giant, is that giant enough? I'm drawing almost over a year's time frame. Possible rounded bottom? That's a lot of rounding, but sometimes the bigger rounded bottoms can have bigger moves that unfold. And you could watch this. You could put you could put in here actually an alert too to let us know if we're breaking above a range. Last one. PCAR. There you go. So what do we have on PCAR right there? We're just barely, as of today, not just breaking that downward sloping channel right there, but right there, we're just getting potentially above the range. Maybe we're just starting, to extend higher here. These are of interest, and this is what a lot of our ThinkScripts can do here for us. I'm going to go ahead and share those in the class with you guys so you have them right now, both this and the flag. In fact, if I just go here, customize, I think I can, no, let's see, I can do it from here. Yeah, this has got the bars. Now, I got these, this is a column, okay, but I'm going to put this in. So this is the TTM first, just so you have it. I was not going to leave you guys hanging. I did that like a year ago or 6 months ago, and nobody was happy with me. And I prefer to make you guys happy, not mad. All right, let's go to the flag reloaded. Remember, this is the flag. You want the flag as well? Here's the flag. This is the one from Ken originally, way back when. You guys have asked about it many times and brought up Ken specifically, but there's this one. And then last but not least, we've got to hit our reloaded. The first one I sent through was the TTM squeeze. Okay, just so you have it. Okay, so these are previous ones that we had done, but there you go. Want to go through, and each and every week we're going to go through and just see which of our scripts that we've done might be having more relevance in the market. Looking to place some paper trades on those and track those within this class as well, because we want to make use also of these trades and ultimately get to the point of placing those trades and at least keeping you guys an eye out as to what has been moving. And today we did tap into a little bit of the markets and sectors class that I do teach on Wednesdays, which was information about, let's say, for example, that Honeywell, right? Tariffs are a big thing, and that can also help to influence price moves. Why not bring it in if people are looking for macro drivers as well? We'll try to do all that in this class. Folks, really appreciate the back and forth today, and love the comments. Thanks so much, Scott, for your help in the chat as always. Again, folks, if you found value out of our presentation, just hit that like button, and it has been good being here with you. Have a great rest of the day. See you next time.